All right, so now that we're done with chapter 2, it's time that we move to chapter 3, where we'll be going through liquidity. So now in this chapter, you will be learning about liquidity. What is liquidity and how to spot them in the marketplace, right? Liquidity is simply areas where there are stop losses and pending orders. But note something. However, this does not mean that all orders are worth the grab, right? For example, we have popular areas where we can spot as our liquidity, such as equal highs and equal lows, popular known as support and resistance levels, right? And then we also have trend lines, and lastly we have golden zones, right? Basically they are known as 618 fib level, like Fibonacci level, right? So here I have examples. Here I have examples right here. This is our example of equal highs and equal lows, which some people know this as a double top, and then some know this one as a double bottom, right? And then this one right here is just a liquidity resting above a down channel, right? And then this one is just liquidity resting below an up channel, right? So basically what happens in this scenario here, the market will most likely sweep the liquidity and then drop again, right? And then on this example right here, the market sweeps the lows and then takes off again. Right here, the market is just reversing to the opposite direction, and also here the market reverses to the opposite direction, right? And then now here comes the golden zones, right? The golden zones, you need to understand something. On a Fibonacci tool, we have what we call a 50%. A 50% is right about here, né? And then above 50%, it's 618 level, and then 62, just like that, so on and so forth, right? And then these levels right here are not in the premium, right? Whatever whatever at the top is considered as premium, and whatever at the bottom is considered as discount, right? It's more like selling high and then buying low, right? Yeah. So on the 61.8 level, it's where we say that the market most likely take a liquidity at. So these levels are not good levels to sell from, right? So right here we have our equal highs and equal lows example, right? For example, now right here the market was bouncing all the way to the downside, right? And then what we had right here was that the market did a minor pullback and then broke structure. After breaking structure, it came back right here to actually do what? To actually bounce from this level. But then the market did what? Invalidated it, because it's a nice support, it's a nice resistance. It's a nice resistance. As we can see from support, the market was supporting right here and then broke to the downside and then came back to retest to the downside, and then other traders were waiting for the market to come back right here so that they could sell off again from this point, right, to actually potentially target this low. But then notice what the market did. The market came back, bounced. They are happy. They are in profits. After that, the market violated that area, right, and then went deep into their direction. You see, so that's how it works. And then this one is for like a sell scenario, right? And then we have a buy scenario right here. The market did what? Bounced once and then came back to bounce for the second time and then went. Other traders were waiting for the market to come back and bounce at this level again. You see, right here, because it's a nice support. It's a nice support from resistance. The market resisted right here and then it broke to the upside, supported, and then supported, broke, made a fake out right here, came back, support, just like that support. So they were waiting to buy from this level again because the market supported. But what did the market do? The market invalidated that support and then went right to their direction to take out what is high. You see, so that's how you should spot equal highs and equal lows. We also have triple top, triple bottom. Like there are plenty. Just need to actually see how you can actually identify them in the marketplace. But then you need to understand something. If you check the support and resistance levels, that's where we actually look into take profits or place our orders after those levels, you see, because we know that's where smart money traps traders, right? That's where smart money traps traders, just like that. So right now we are going to look into trend line examples, right? So these are levels where retail traders are actually looking at, right? For example, this is how they will draw their trend lines, right? This is the first touch, second touch, and then they potentially waiting for the market to do what? To come back. Sorry about that. Let me just label it as a liquidity, right? Let me, where's that dollar sign? Okay, here is it. We had our first touch right here, and then here's our second touch, and then potentially they are waiting for the market to come back to what? A third touch, right? But then the market, when the market comes back, it does what? It invalidates this point right here. After this structure is broken, they thought that, okay, now the market has broken to the downside and closed outside. So now we're going to wait for the market to retest and then we chop. So potentially they will be looking for something like this, right? We trade retest of a trend line and then they look for something like this, you see. But then what does the market do? Smart money traps them and then comes back and give them that confirmation that they are looking for, right? And then the market will go in their favor, but then eventually does what? Whipsaw them, takes them out, right? Just like that. This is in a bullish example, right? This is in a bullish example. And then we also have what? A bearish scenario. Our first touch, second touch, and then potentially they are waiting for what? For the market to come back right here so that they could sell off again. What did the market do? It respected, went in their intended direction, giving them high hopes that, oh, sniper entry, so now they are the best traders in the world. But then what does the market do? What does the market do right here? It plummets off, it takes off, right? Taking them out, right? Let me label this as our this is our liquidity zone, right? That's how you spot these liquidity in the marketplace. Essentially, you look at trend lines, you look at your golden zones, you look at equal highs and equal lows, just like that. That's how you spot liquidity so that you can't become the liquidity. So we're gonna dive into golden zones, right? So you're gonna take your fib, right? You take your fib tool, it's Fibonacci, right? It's Fibonacci. You take your tool and then you mark the high of the leg, right? You mark the high to the low, right? To the low, right there. Yeah, just like that. So this is our 61.8 level, right? This is where we actually don't want to be selling from, right? As we can see right here, the market did what? Dropped, broke structure right here, and then you were gonna wait for what? For a retracement, right? And then look what the market did right there on the golden zone. the market left us what? A double top right there, which is liquidity, right? The market left us a double top right there, which is liquidity. After the market gave us a reaction, after that came back to take what? Out this liquidity on the golden zone, right? Because these golden zones are areas where I would say it's still areas of resistance and support and resistance, right? Areas where you would find that, okay, right here we find what? We find our our turning points and stuff like that. For example, let me show you. If I adjust this line to the left and then I adjust it to the right, you can see that it's respecting this level, right? The market has been turning on this level, has been turning on the level. So it creates what? It creates liquidity, creates more and more of liquidity. So when the market come back to these levels, it will only give us what? A reaction. Sometimes it doesn't even give us a reaction at all. It takes it out straight. Let's say, for example, it tapped and then it will do something like this and go up, right? Into our premium, not discount. Whatever happens on the top, at the top, is what we classify as our premium. And then whatever happens at the bottom or below, it's what we classify as our discounted levels, right?